Here we are at day 4, week 11, and the last 2 days of this week we're going to spend with all three of us here, Justine, Tracy, and myself, and we're going to look at several charts. And what we have up here at the moment is the yesterday's S&P chart on a 5-minute basis. And we want to use this chart to show you a number of things, where we would get in, where we would get out, and the various executive decisions we might make. First of all, Justine, would you like to talk about how the alligator is closing in the saddle point here, and what that means to you?
When I see the indicators very close to zero and the alligators intertwined, I get more excited about the upcoming move. The market cannot stay for a very long period of time without new information. So the longer it sits in this saddle point, which I'm referring to the AO and AC, the bigger the move tends to be. When I see this, sometimes I will then change my mind. Earlier you've heard me talk about picking some outer fractals, maybe not taking the closest one in. But when I start to see this change in the market, I get more excited and I tend to place my fractal by a little closer. Where the cursor is right now would have been your last choice. You could have backed up to the either previous fractals. You had one or two, that fractal, or you could have even gone back to this fractal. Any of those three would have been a great entry, and I also would have bracketed the downside as well, right there. That would have been the first, and maybe that one. You have some choices. It depends what type of trader you are. If you're really aggressive, you would have probably taken the first fractal. If you're not such an aggressive trader, you might have taken the second fractal. You know, we really stress that how you trade is your belief system, and where you get in a market and where you place your entries is all about belief and comfort zones. So at this point, I would feel real good about the up and down fractal, and I would wait to see what the market was going to do. I don't care which way it goes as long as I'm there.
And Tracy, you might point out that this software, these deltas here, are fractals. And Tracy, how would you approach this?
I would approach it the same way as Justine, as when the market entered the balance point or the saddle point. I would become very interested in this market and would have bracketed the fractals. The middle fractal of the three fractals would have been my first entry as well. I would have taken the fractal down, and I would have taken the short signal, would have been stopped out when the market crossed through the red line, and then would have been stopped in long when the blue squat bar there took out the high of the previous fractal. At that point, I would have been long and would have ridden the alligator up as long as it had allowed me to.
And this is also a good illustration of how the computer really makes our job very, very simple. Remember that the green bars indicate that the momentum and the acceleration is up, the red bars, the momentum and acceleration are down, and the blue bars are squat bars. And let's move on. This is about 8:30, 9:30 in the morning, and assuming that we had bought here and we are still going up, let's move the chart forward to see how it looks. And here this is our 8:30, these were our entries, and the market, we have continuing entries up here. Notice that the alligator has come back into the mouth. And Tracy, how would that affect your trading in this area right here?
Well, at that point, what I've noticed is that we did have 5 green bars.
Yes.
And may have chosen to stop there. And actually, I would have chosen to stop out after the 5 green bars because we're still a little close to the alligator's mouth. If we were further away from the alligator's mouth, I may have chosen to use the red line.
Another point here is, I believe, as I'm looking at this, I think this is a bearish divergent bar, which we've discussed in the home study program. And Justine, what would you have done here? You're outside the alligator's mouth, you have another fractal up, and whether you got out here or not, what would you be doing in that area?
Would have re-entered if we'd have been stopped out, and I would have been stopped out prior to that, so I would have gotten back in with that, especially looking at the formation of the alligator. The mouth is wide open at that point. You've got the AO is increasing, and your AC is actually increasing. I might probably at that point have put my stop at the green line though for a little while. This is the S&P, it's a 5-minute chart, it's a little more aggressive, and again you had 5 green bars once you were back in. So this is an executive decision. Now this depends on what type of trader you are. If you were an aggressive trader, you would probably not take the 5 green bar trailing stop, and you would have used the red or the green line. So remember again, how you get in the market, how you stay in the market really depends on your personality. If you're a long-term trader and you want to hang in there for the most, you would have used the alligator as your stop close only.
This is a very, very good point, I think, right in here. And Tracy, would you say something about how you would decide whether to take the 5 green bars, the green line, the red line, and obviously at this point there's no opposite sell in the opposite direction?
Yes, but at this point I would be using the green line, either the green line or the red line, and actually it would depend on how I felt that day. And that may seem a little strange, but each day, each trader is going to feel a little different, and they may even be basing their decision upon their previous trades. Not that that's the correct way to do it, but that only seems to be how it goes. At this point here, I would notice that on the AO oscillator there is no divergence, nor are there any squats up there at that point on the top 3. Well, there's to the left of the fractal there's a squat bar, but the market has gone higher than that, so I wouldn't really consider that as being a squat I'm not concerned with that squat at this point. There's no divergence. The AO and the AC are both still up. Now right beyond that, I'm starting to notice that the AC is starting to turn down up around 11 o'clock, and the AC is starting to pull down, and now I'm definitely using the green line as my stop at this point here.
Another point too also, that the price bars in here are running fairly parallel to the green bars, but up here the prices are what we term a runaway market because it's going at a steeper angle than the green line. So let's go ahead, and this is another good point to make, that, and we'll be talking about this next week, is that we all trade our belief system. So how you feel, and one of the important things in this training program is not only to learn how to trade well, but more particularly how you trade well. Let's move forward now and look at what the market does. Notice here, and Justine, I know that you look at this quite often, when the lips start turning down, what does that mean to you?
When the lips and sometimes the balance line is first, sometimes the lips are first, but when I see that angle start to change and they start to close together, I definitely tighten up my stops wherever it was. The S&P is a very volatile market, as we all know. It can move 50 points in a matter of 10 to 15 seconds. So when I saw that you look it down at the AO, you saw a change in your momentum. You're starting to come down. You've got red bars. Your AC has changed. You've got a couple squats on the top. So I would have been stopped out there. That's fine. You had a nice run. You came up. You followed the market up and got out. And really, I try to just follow the market. I try to follow what I think and what the market's telling me. And the Gators formation, the more you watch the market and the more you observe the different markets that you tend to trade the most, you'll see the formations and how they change. Every market is different. Some of them have a little more leading indicator, I would say, or I can see ahead of time what I think is going to happen. Sometimes you have no idea what's going to happen. Following the signals is the best way to go, and following your belief system. You have to be comfortable with what you're trading. But when you start to see these changes and you see a squat on the top, you see your oscillator change, you see your acceleration change, I'm then going to pay a little closer attention to the market.
Good point. And from yesterday, if you remember, we were talking about trading with the Elliott wave and trading without the Elliott wave. Obviously, we count our Elliott wave on the momentum chart, and this is a third wave of some degree or another. So we're expecting, particularly since the momentum and the acceleration is turned down, we're expecting some sort of a wave 4 here. Now, if you have an objection to the Elliott wave or just don't like it or think it's too subjective, another way is to remember that anytime the price bars are outside the alligator, you're in some sort of a impulse wave. And when the price bars start intertwining with the alligator, you're obviously in some kind of reactive wave. So this is about noon on yesterday's trading. And let's go forward now and look at what happened. And Tracy, would you like to comment on what happened between, say, noon and 1 o'clock here?
Yes, between noon and 1 o'clock, a lot of, notice that we don't have the volume up here on this chart, but if you look at some S&P charts, between about 11 o'clock and 1, you'll see normally the volume drop off. That is because a lot of floor traders and brokers are having lunch. Again, that is just something that's in the back of our mind. It's not something that we trade off of. The only thing that we need to trade off of is on the chart. And on the chart, what I am noticing is that the AO has pulled back, as Justine said earlier, and right about 1 o'clock, the market made a new high. That to me looks like a divergence between maybe 3 of 3, 4 of 3, and 5 of 3. Notice we do not have the correct number of bars. However, we did not cross 0, but we do not have the correct number of bars. So we cannot be sure if that's just 4 of 3 or if that's the big 4. Once you start looking at enough charts, you can get a feel for if it's just 4 of 3 or the big 4. At this point, it looks like just 4 of 3. So I would say that the top up there right around 1 o'clock is 5 of 3. We're going into the 4th wave here. Again, as Bill said, if you're not wanting to use Elliott wave with the AO, you can use the Elliott wave with the alligator, and the price action is in the alligator's mouth. To me, that is an obvious correction of some degree, and I tend not to trade that area. What that means is that sometimes I miss a good trend. But psychologically, I don't get beat up as bad by not getting in the beginning of the 4th wave. Now, I want to get in the end of the 4th wave when I think the 5th wave is beginning, but in the beginning of the 4th wave, I just choose to stand aside, and if I miss a move, that's okay with me because that's what my belief system is set up, is that I'm going to miss 1 or 2 out of 10, and I'm fine with that.
A couple of points here. Number one is that we're doing this impromptu. We haven't looked at these charts, and we're doing this to try to show you how important it is to make executive decisions, and this is the art of trading. So we think we're in some sort of a wave 4. We've agreed upon that, and this is where most of our whiplashes happen, so we want to be very careful. And Tracy, let's move forward a little bit more and see what happened after this. And here, this is extremely interesting because we have a fractal down here, which when it was hit was below the teeth. We have a fractal here, but we haven't had a sleeping alligator. Now this brings up an interesting problem here, and what I'd like to do is ask Tracy and Justine both how you would trade this.
First, I want to say that first fractal back, this may be confusing to you. That fractal is not formed below the teeth, but where it will be hit is below the teeth, and that's the key. So many times people will call in and say, well, the fractal was above the red line. Well, the down fractal was formed above the red line, but it was hit below the teeth, the red line. So that is that's your key for fractals up and above and below. You know, many times the markets will do things. We get used to seeing the market. It has the same pattern. I can remember looking at the knife every day and it twisting and turning 6 times before it would break out of the alligator. And then one day I was trading it, waiting, and it just took off. So the markets can do things sometimes that you don't expect. In this case, the gator never shut. It never went to sleep. So this would definitely be an executive decision. If you were aggressive, you would definitely probably have taken that down fractal. If you were a more conservative trader, you might have sat back and missed this trade, which is okay too. Tracy, what do you think?
Actually, I would not have even had the opportunity to trade this market because all three of us, we can rely on the other person that if they see something in the market to let us know because we're not always watching the 5-minute bars. At 1 o'clock, as we said earlier, it looked like the market was going into a 4th wave. I would have left the trading room and would have done some other work because the mouth had not even closed there. So I probably would not have come back into the room for 15, 20, maybe even 30 minutes to see if it started to close. And at that point, you can see it's already broken down. So I would not have had the opportunity there. Had I been watching the market, I would have definitely not taken the first fractal, and more than likely would not have taken the second, just because that move there, oftentimes you can see it come down, if it is a 4th wave, to about a 38 to a 50 or 62% retracement, and then come back up. In this case, it did not, and as Justine said, for me, this is just one that I missed.
And you would have been trading against the trend, actually.
Yes, absolutely. You would have been trading against the overall trend, and again, I don't use the Elliott wave in all my trading, but it does help me stay out of some trades. I may not take one just because it is, I think, a 3rd wave, but I can definitely use it to my advantage to keep me out of some bad trades.
I agree with that, and let's go forward and see what happened after 1 o'clock. And you notice that this was indeed a very, very big move down, and the alligator's mouth did not stay closed, and this is sort of unusual. So we don't worry about the trades that we miss. What we're interested in is that the trades that we take be primarily profitable. And again, our whole point here is learning how you trade with your belief systems. So we missed this entire trade here, this entire fall here, and let's go forward one more time, Tracy, on this. And now the accelerator has turned up, and also the momentum has turned up. And Justine, at this point, what would you be doing in the market?
Well, I would be out. Remember we talked about back in week 5 and 6. Notice that the AC changed first. You saw it go from red to green. Then you saw the momentum change, and now you've seen the price pull up. I truly would not be interested in trading this right now. I like to see the gator sleeping. You've got a number of squats on the bottom. Out of 2, 4, 6, 8, 9 bars, you have 4 squat bars. And I don't see any signals for me to get back in the market at this time. I would just sit back and wait and let the market tell me what to do next.
Good point. And one of the things we might also suggest is that in your material you have Investor's Dream, which is our proprietary software, and you can go through that 1 bar at a time, and it will list all of the valid and invalid signals, and it's a very good practice piece. Okay, let's go one step further and see what's happening in this 4th wave here. Again, nothing basically is happening. Again, as Justine pointed out before, the mouth is beginning, the lips are beginning to close, but nothing great is happening. Nothing has come across. We don't have across zero, we don't have a saddle point here. And let's go one more time. All right, and one more. And this is a typical Elliott wave. Now, this is forming, I think, a much better potential trade than we had earlier this particular day. And Tracy, do you and Justine want to comment about where we are right now on the screen?
I would say right now, you really just said it, potentially maybe looking for a trade. The gators are closing up, the lips are approaching the teeth will soon be probably approaching the balance line, and you're going to see the gator go back to sleep. That's when I'm going to start getting excited again and start looking for my outer fractals to bracket this market and go whichever way the market takes off again.
Tracy?
I'd state that, you'll notice at the bottom, this is overnight. Here, this is 345. We are speaking of the overnight markets because we do have people overseas who do trade the S&P overnight. It can be very profitable because, as you know, the S&P as well as the currencies and maybe even the bonds move as well overnight some nights as they do in the daytime. As Justine said, the point here though is to notice how the mouth is closing. And this is where I would, as I said earlier, I would just leave the screen for a while and maybe come back in 30 minutes to an hour to see if it's really sitting in there. Again, if I miss one, that's okay with me because that's fine with me. That's okay with my belief system. Now, if I'm watching it and the mouth is closing, and then I do not bracket the market because I have a bias that it's going up and then it goes down, then I'm not too happy with myself because what I want to be able to do is follow the market.
Good point.
And also remember, that, if the markets are like a natural phenomenon, I think of the markets as breathing. So they've just had quite a move up and quite a move down. After that, they're going to have to take a breath. They're going to have to sit and go sideways for a little while. That's what we expect to see before the next move.
And one of the things you'll learn when you come to the private tutorial, and you'll experience a great deal of, is very subtle changes in the alligator's personality. For example, notice the whole alligator's mouth here is shutting rather quickly, and is turning over and going the other side. And again, as Justine pointed out, this is kind of unusual. Then look at how the alligator is just gradually closing his mouth here. And remember that the alligator, the longer he sleeps, the more he's going to move later. So let's go forward one bit and see what's happening with the alligator now. And again, it's still sleeping. We don't have a saddle point, but we're much closer to a saddle point here than we were back here when he first closed his mouth. Let's go another time forward. And one more, and again, this is impromptu. We don't know what's coming up here. Are we on real time now?
No, that's still the overnight.
Okay, let's go forward one more time.
Before we go further, I would like to state that at this point, the first fractal to the left of the screen, the first fractal all the way to the left, one more to the left, CPG is not, the furthest out fractal is where my entry would be. If I were interested in trading this market, if it were a daytime market, we will see markets like this during the pit session. If this were a pit session market, I would have my fractal at that point there because the market has really not closed in the mouth of the alligator.
I agree with you, I do too.
And another thing that's very important is that if I may go back just one time, twice here, notice the move down. What a lot of traders will do, if they miss a move there, they're going to force a trade in here, in this area, to try to catch up with it, or try to make up for that loss. I think that's one thing that I've learned from Bill. One of the most important things is not to marry a trade, to divorce it. Whether you make money on that trade, or whether you lose money on that trade, or whether it's a trade that you missed, forget about it. Worry about what's coming up in the future. And that's where I would have my furthest out fractal at this point. And as Justine said earlier, once that saddle point comes about, then I may choose to take closer fractals.
Okay, I think that's probably enough for you for today. Again, we suggest that you go to Investor's Dream and to go to real-time charts if you have them, and look at these and just become familiar with them and become familiar with the behavior of the alligator, because that's most important. Also, don't forget your AT. This is also important to keep your belief systems down, to keep you out of bad trades, and make sure you do your morning pages. And another thing that we also suggest is that you keep a diary on the back of your order forms, exactly why you took the trades, what you observed about the market, and how it turned out. Tomorrow what we'll do is we'll go through some dailies, and we'll do a commodity, and we'll also do a stock practice for tomorrow. So have a good night, enjoy yourself, we'll see you here in the morning.